The narrative about where the relationship between the two countries is headed has been shifting very, very rapidly, as you say, driven by the political dynamics in these two countries, but also by geopolitical factors. Now, it has become quite clear that the sense that China does not have many cards to play, that China might have to give in to U.S. demands because of its domestic economic weakness, that has certainly shifted in the last few weeks. China certainly is able to very effectively use some of the choke points it has on the U.S. economy, and it has shown a clear willingness to use them. And Trump seems to realize that you cannot use tariffs to get all of what he wants. Now, the big question is what a deal might look like, because ultimately the crucial issue is that Trump needs to be able to declare victory. I think at the beginning of this process, he was looking for almost unconditional surrender from China. That is clearly not going to happen, but he still needs to declare victory. Where I think we might end up with is a level of tariffs that is probably much greater in China than in other countries, but perhaps a deal that folds in other elements that Trump has talked about when he talks about using tariffs as an instrument of policy. You know, if China can argue that it is doing everything it can to control the flow of fentanyl and other illicit drugs to the U.S., take some action on immigrant flows, although I don't think there are that many from China really, that will create a deal that encompasses much more than economics. But it's going to be a tough slog.
So it sounds like for Trump to be able to declare a victory, it will be tariffs, yes, not at the levels that we've seen right before the truce, but also, so something lower, but also concerning other areas outside of the economy.
It's worth keeping in mind that Trump has around him people who he pays attention to, some very tough China hawks. So I think the notion of taking tariffs on China down to the levels that they are against other U.S. Trading partners, I think is not in the cards really. But certainly the sense that the U.S. economy might end up getting hurt if China keeps some of these measures like rare earth mineral export restrictions and so on in place, I think that is beginning to have an effect on Trump's thinking about this. But where it'll end up is very hard to predict. But certainly there are positive signs. There are discussions between the two sides at a technical level, at a senior policy level, and of course at the level of the two leaders. And so long as they're talking, I think there is hope.
Right, and we do see the two sides coming to the table with the talks in London. Do you think it is in their self-interest of both countries to at least have some level of engagement or negotiation, or is there genuine willingness to manage some sort of interdependence?
These are the two largest economies, and even if they want to dance around each other, they are going to step on each other's toes. And I think the question is whether they can find some way of living together, because the level of hostility, especially coming from Washington, where hostility against China is a bipartisan issue, that's going to be very difficult to get around. And especially if you have these geopolitical events where China is seen as on the other side than the U.S., that makes it a lot harder to bridge those differences. But the reality is that while the U.S. economy has held up quite well so far, there is a sense that it might be losing momentum, and certainly all the uncertainty, especially related to the negotiations with China, are not helping. China, for its part, faces similar issues. It's an economy that is doing reasonably well, but the added uncertainty from the trade tensions with the U.S. are certainly not helping. So certainly both sides have an incentive to lower the temperature, but it's probably not going to be a very cordial relationship.
So in that case, without that cordial relationship, or maybe that's already a foregone conclusion, who stands to lose more, or who stands to gain more in this case?
That's a question where, again, the answer has shifted over time. It looked earlier this year like China was in a very vulnerable position because economic growth was slowing, the private sector was not responding as much as the government would have liked to some of the stimulus measures it put in. It looked like the U.S. economy was on track towards a soft landing, but the imposition of tariffs has shifted that narrative. Certainly the imposition of tariffs against all countries and the fact that they are raising barriers as well affects trade and economic prospects around the world. But in a relative sense, I think the U.S. has probably gotten hurt the most, because after all, the U.S. has put tariffs in place against practically every trading partner, and all of those trading partners have retaliated. So each of those trading partners is hurt, but it's only their trade with the U.S. that's hurt, but the U.S. has all of its trade being affected. So I think relatively speaking, the U.S. was probably going to take a bigger hit. But China, on the other hand, is in a much more vulnerable position because it relies a lot more on exports because it's created a lot of excess capacity over the last 2 or 3 years. So again, this narrative has continued shifting, and I think at the moment, both economies seem stable, but are quite fragile deeper down.
Got it. And I want to come back to the point about the export-driven growth for China and the risks or risk of a backlash on that. But before we go into sort of China's model and its domestic situation, I wanted to ask about the rare earth metals as potentially a sticking point in these negotiations. So China has a near monopoly on processing these critical minerals, and the U.S. needs China for that. So do you think for China it's a negotiation leverage or tactic, or is it really going to weaponize that against the U.S.?
It is a hugely important tool, and China has shown that it is willing to use it. It's worth stepping back a little bit and thinking about the broader issues in terms of the conflicts between the two countries. Yes, there are tariffs related to what Trump sees as the biggest problem, which is the U.S. bilateral trade deficit with China. But the issue that comes back from even the Biden administration is that the industries that the U.S. is counting on for its manufacturing revival are the high-tech industries, green energy, electric vehicles, and so on. Certainly, Trump is turning away a little bit from those, wants to revive smokestack manufacturing. I don't think that's going to happen, but really these high-tech industries are where the action is. The issue is that these are precisely the industries that China is counting on for its own manufacturing revival in order to move up the value-added chain and increase productivity. So there is no easy way to manage the differences between the two. And when you start thinking about rare earths, exports from China, or technology transfers from the US, these really have a very significant bite. So I suspect they're going to be a very important part of the negotiations because China can really put a crimp on a very important evolving part of US manufacturing.
And so also looking beyond the U.S., other countries also have concerns for years about what they say are unfair trade practices in China or even broader in Asia, and also currency situation. So how are other countries going to deal with China's economic influence and its export-led growth if it's able to sustain that? And you've written about concerns about inexpensive Chinese goods flooding those markets. So how will other countries sort of react to China and its relationship with the U.S.?
This is a very difficult time for countries around the world because, it is the open trading system has worked very well, especially for the middle powers as well as for some of the larger economies, the commodity exporters, but also countries like Japan and Germany, which rely to a great deal on exports for their growth. Now you have the largest economy in the world, the US, essentially putting up trade barriers. You have the second largest economy in the world trying to export its way out of an excess capacity problem. So countries around the world are really getting squeezed. And when I talk to policymakers from every other country, these are the two biggest concerns they have because the US has been generating a lot of the final demand in the world economy over the last few years, even though China has been adding more to global GDP. And it is very clear that China right now has an excess supply problem. And the response, unfortunately, that we're seeing around the world is that countries are raising trade barriers. So because of the fact that they're caught between these two large powers, essentially what countries are going to do around the world is to move into a somewhat defensive mode. And the defensive mode is almost required because if you take even a country like Japan or Germany, they rely on exports a great deal more than the US does. In addition, these are economies that are not doing very well right now. So they cannot afford to start being seen as markets for Chinese goods and not have much final demand for their exports. So I think they're really going to be in a bind.
So final question for you. What does this mean for China's domestic economy? Will China rely on consumption since Beijing has signaled that domestic demand is a priority, or will it still rely on this export-driven model that could create these risks with global trade barriers coming up, as you say?
That is the great hope, that there will be a rebalancing of domestic demand within China, and practically every official document that talks about economic policy does mention the need to boost consumption. And it is an interesting time in the Chinese economy because on the surface everything looks very calm. The financial markets have revived in the last few weeks. The renminbi's value seems relatively stable relative to other major currencies. Domestic demand is doing all right, not great, but industrial production, fixed asset investment, and even retail sales, a proxy for consumption, are doing well. The problem is that the underlying problems, a weak housing market, a financial system that's not doing very well allocating capital, local governments under stress, are all making it very difficult to stimulate consumption. So what China really needs is more fiscal support, both in direct support, but also changes to the tax regime that can help boost consumption. The leadership seems to know where they want to go in terms of consumption. Whether they are willing to do the hard work to get there remains to be seen.